Ladies and gentlemen, welcome to, actually my camera's in the wrong spot. Welcome to the SoFi Weekly. Today we are going to be discussing everything that happened within the week. We're going to ask Roy why his room keeps getting darker and darker. Seriously? And how Tevis is growing all this new hair all of a sudden.
Oh, hands. Got it.
And a private equity deal that I've recently made that I want to talk to you guys about. I invested in a private company unrelated to everything that we talk about, but it's an investing channel, so I thought I'd share my investments.
Pokemon cards? Pokemon cards? Pokemon cards?
Pokemon cards. No. Private equity at a company. Reached out to them, asked if I can get into their next round. They accepted. It's all this stuff. So anyway, and by the way, we were not waiting on me. This time, a new candidate for being late, Roy, for the first time ever, was late. Why are you shaking your head? No, you absolutely were.
I'm sure that this link is the one that you sent and said was going to be the permanent link, but I'll have to double check. I held on to receipts. We'll see.
Bro, we're not even sure that that's the real Roy. All we see is a floating head right now. Like, it could be a hologram, just some AI thing. Like, we don't know that that's the real Roy.
AI is pretty advanced, so that is
like
true.
You're literally like a talking emoji or one of those things.
Hey, when SoFi gets back into double digits, that's when we go off of dark mode. So not until then, boys.
Yeah. What are you guys expecting for next week? I mean, are we getting predictions in for rate decisions? I think both of you guys had 50 basis points. Are you guys keeping this going into next week?
Well, what I expect and what I think they should do are two different things. So I expect the Fed to always be late and behind. And so they will do 25 basis points because they're the Fed. Jerome Powell is an above average Fed president, but I don't like them. So, 50 basis points. They should have done 25 previously back in July. They didn't. 50 is warranted now. Noto made a point of this too in the Communicopia at Goldman Sachs this week. He said that they should cut 50 basis points because that helps out people that are planning their budget for next year. There will be more GDP growth as a result. And so this first cut, just based on the timing of it and the annualized budget of a lot of companies, it makes a big difference. It really does. So they absolutely should do 50. 75 would be probably too much. Trueflation has inflation, by the way, down to like 1%. I know that doesn't really matter as far as the Fed's decision, but it's crazy.
Sorry, we got a little caught up. People are saying that Cash Coach for me is telling me to pay my him subscription. I actually, we were in the call before, Tevis and I pulled my hair back, and I swear to God, I had no idea how much I may be receding. So who knows? Maybe I'll be a him subscription member, but probably not once I show you guys about my private equity deal.
Yeah, because that's gonna fix your hair.
I mean, you want me to go into it?
No, we can save it for later.
I put a ton down on it. I'll just jump into it. I mean, it's fine. So I definitely have not done my due diligence on HIMS. I think that the competition is super strong. Sounds like an interesting company, but I just can't touch it. So anyway, this has nothing to do with what I'm about to talk about. But anyway, I invested in this company called Row. Okay. They sell, pills to help you with your ED. They help you regrow your hair. They have help you with your fertility. Anyway, has nothing to do with what we were talking about. But GLP-1s. Anyway, have you guys heard about this company? Because it just looks like HIMS.
Yes, yeah, I knew of it. It seems like it's a pretty decent competitor. There's a lot of competition there, but they're in this early innings in the telehealth business, and so really where they're stealing revenue from is not really as much from each other, but from the old guard, like the old way of having to go into a doctor and have him examine you and then write the prescription, you go pick it up. So the next stage of competition will come, but yeah, I don't think it's the issue right now.
I'm not. I have not made an equity investment in Row. I just
I would have been surprised. Like HIMS is a much easier. You can see the financials and everything. It's right there. So I'm not invested in HIMS. I was tempted at 13. I decided I'd wait. I don't regret that, even though it's like at 16 something. I just have my process I'm comfortable with. So
is that actually true that Shannon Sharp was pushing that? Because that's the second person who said this, and I definitely did not hear about it through them. I saw like some advertisement or something.
You just like stumbled upon this controversy.
I think it's because I've been searching up hymns that no, I didn't stumble upon the controversy. I heard about the controversy, and separately I saw that commercial because of my interest in hymns as an investor.
yeah, he said something about it, but I don't know if that's a safe video to play. So we'll keep you monetized this time.
What's the controversy here? Let me pull up the video. We can. No, okay. But yeah. Sorry, I got lost. I'm in a silly mood right now, just making a bunch of jokes.
Well, so rates, Tevis, are you at 25 or 50 basis points? Like, what do you think that they should do, and what do you think they will do?
I think 50, simply because I don't think there's not going to be another Fed meeting until November, right? I'm pretty sure, right? So they have some of a lag in between. They're going to have September and then November. Like there's no October meeting. And so I think 50, and like I get where Noto's coming from with suggesting 50. November 7th. Yeah. So like all of these businesses, they're allocating budget for 2025 spend and determining what they want their software spend to be. And I think it's going to help stimulate a lot of that activity when they're forecasting out future quarters. What I think they're going to do, I mean, I think like I'm right there with you on the 25 basis points. They're going to be fairly slow. I think the market is going to be like, we were at 100 and 100% on the fact that there were going to be rate cuts. And now it's like, yeah, split. I think the market's going to be disappointed either way, regardless of whatever happens.
I think it's 25 basis points.
So
yeah.
Tevis already answered this, but what do you think that the market reaction will be?
Nothing. I think it's all the trading. Well, I mean, I'm looking really into fintech stocks for the stories on my show, and I honestly think that a lot of them, at least for the initial rate cut, is just going to be a sort of buy the rumors, sell the, but not even sell the news, just neutral the news, and that's it for a 25 basis point cut. I think 50 will be much more drastic, and even then, I've never been great at trying to understand the markets. I mean, in my opinion, I think that it would seem bearish if they did 50 basis points, not genuinely bearish, but that would have, causes of concern. But I've never been one to be right on that kind of stuff. I'll leave that stuff for the TA people, the shorter term investing types.
The astrologists?
The astrologists, yeah. They don't like when I call them that.
It is so fun to call them that, though. But yeah, I've got some friends that are TA investors. Well, we have some mutual ones. So, and yeah, it is useful to look at from time to time. But yeah, it's tough to say. I think personally it'll be a sell the news event no matter what, unless they do something really weird. That could happen. I think if they do 25, they're doing 25 the next two as well.
Yeah, that's what I believe. I think it's going to be continuous small cuts to monitor and make sure that they don't overstep.
Yeah, I think the market reaction has been front loading a lot of that. I mean, Redfin was up 25% today. Roy and I had a good little laugh about it. A lot of these risk on low market cap, high growth, rate sensitive stocks have already seen some pretty big run-ups just on the anticipation. And so this is why I say, I think regardless, it's going to be somewhat of a negative reaction because it is going to be a sell the news event. I hope I'm wrong. I hope the market flies up higher. But again, it's been flying up. Like we were supposed to get like drawdowns this month. I even have cash just sitting on the sidelines that I didn't want to deploy like a week and a half, 2 weeks ago, because I was like, well, whatever. Like I'm not going to have the cash again for another couple of weeks, so I don't want to like just throw it all in early. And the market's rebounding, and so I'm just like sitting with the cash. I'm not sad about it because it just gives me a level of security. The point being is everybody was expecting September to be a big drawdown month, and largely September's been pretty solid.
What's it called? I'll let Roy answer this question, but
No.
Roy, can SoFi be the next Palantir? Do you think that a 25 or 50 basis point cut brings us to, well, I mean, we kind of started at the same place. So do you think it brings us to $25, $35 a share?
Well, answer the question two ways. One is if it's a company like Palantir, no, the TAM is not anywhere near. There's a lot more competition. Great company. I'm in SoFi for a reason. It was, and then I bought more PayPal. Briefly, my second largest position, and now it's third. And if it has another week like this, it'll be second again. But as far as the run, Palantir went over basically a little bit less than 2 years, a year and 3/4 from $6 or $7. I know it was like $5.89 or something at the low to where it is now at 35. I don't see SoFi going on a similar run, but I think that there's a chance where we could see something like that. Not quite as strong, but similar to what Robinhood's trajectory is. They have some overlap there too, but Robinhood went from the 8s and the 9s to, I think it's at 22 today. I think we can definitely see a move, a doubling, a little bit more than a doubling over the next year. And we have to also keep in mind that Anthony Noto and Chris Lapointe and others are wanting to get their PSUs. So that's June. Is June or July 2026?
I don't know.
I think June.
I'll have to look that up again. But I think that they'll do. It seems like that there's some. This is a very deliberate company that has a very strategic plan. They pulled back some things just because of the macro environment. As they launch those, as they open up the loan books, especially student loan lending, mortgage lending, personal loans, like the company is going to put up really, really good numbers in 2025. I have very little doubt of that, barring a massive, massive recession. Now, if that happens, which I don't see, like maybe a soft recession, couple of quarters, no big deal. That's fine. But other than that, like SoFi is going to do very, very well. We'll have to see what the stock does. But my guess is that the predictions that we had this year for SoFi, they're more realistic for next year. I would say more likely than not. So
somewhat on the same page, somewhat different. Can SoFi be the next Palantir? Like if you look at Palantir year to date, it's like 120, 130%. Like SoFi's at what, $7.50, $8? It would need to go to $16, $17. Yeah, absolutely. That's totally reasonable in the next year. Can they be the next Palantir to be like a 33 price to sales ratio when SoFi's a 3 price to sales ratio? Are we going, to $80 next year? Then definitely not.
Doesn't SoFi make more revenue than Palantir, something like that?
Yeah, isn't that strange? Don't they have a higher growth rate than Palantir too?
No, not.
I don't think anymore.
Not anywhere close.
Palantir's growth rate, yeah.
And as far as revenue,
actually, yeah, they definitely do not. They do not grow faster than SoFi.
Yeah, I'm pretty sure Palantir is less than SoFi.
What SoFi last most recent quarter was 34% year over year
revenue growth.
I thought 28, but I might be wrong.
It's 27% for Palantir. So, but it's not just about revenue; it's actual profitability. So, yeah, I'd say we've talked about valuation on Palantir before. By the way, it had its highest weekly close in history ever. Still a long ways from the all-time high, but yeah, it's an expensive stock. Will SoFi get to the point where it's, instead of deeply undervalued where we're at right now, to expensive? Absolutely. Will it have this kind of a run? I don't think so. Like it takes so many things for a stock like this to go on this run, and it's not just execution. Like Anthony Noto could come out and just have like the most epic, year and a half of a company in history. Robinhood, I wouldn't say quite did that, but it's close. Like what Vlad did over the last year is just phenomenal. And their stock is up like 1.5 times over the last, year and a half. It's a little bit less over the year. So they started out from a very undervalued basis. For Palantir to do what they did, they not only needed phenomenal execution, they needed to be deeply undervalued, which they were, but they also needed the extreme tailwinds that is currently the AI trade. Without that, like maybe we'd be trading at 20, 22, something like that. Not
Bro,
very.
this guy took my profile picture and put Noto's face.
Toes Noto. No, I mean, like they're just completely different companies. It's kind of like asking if SoFi can have a Tesla move. No, it can't. But I will say I think that if rate cuts continue what they're doing, we don't have a massive recession, and they execute well, which I think that they will. It's a massively shorted company, so not to the extent of Tesla, but we could see a very violent move.
What do you mean to the extent of Tesla? Like how does that framing work? Because that's, I think, the part that I'm not understanding. Like, yeah, I could have a very similar move. I'm not saying that SoFi is going to be like up 3 or 4 or 5x next year. Like if that's what you mean by Tesla move, then I agree with you.
That's what I mean. Is the S curve. This isn't like an S curve type event. SoFi will be, and actually Chris borrowed a phrase from me, which I appreciate, the golden confluence. And there's a little bit that he got me thinking that way. That's just like, he's right. It's not quite the same as what Robinhood had as far as the 3 different vectors of the business, all overlapping for an incredibly strong year, which is why it moved the way it did. But SoFi has something similar to that coming up in 2025 from all 3 of their platforms. And they haven't really had that yet. So this may be the strongest year as far as performance. But, if you look at what Tesla did during the COVID years, like that's what I'm saying is if somebody's expecting, and it's just nice that they're saying that about Palantir now. It's like, yay, we did it. But if someone's expecting SoFi to go from, $7 and change, $7.50 to like $35 in the next year and a half, I mean, like it could. I would put the odds of that low. 20s, I could see 20s in a year. I for sure could.
It's very hard to look back. Could you expect what happened to Palantir realistically, looking back, going to $35?
I will show you a tweet of mine. Let's see, what was the keyword? Prediction.
I'm curious to see your 12-month prediction on Palantir, Roy.
So here is
his next 12-month.
Yeah, going forward.
Here's a discussion going back.
Usually you're never zoomed in, and now it's the best.
Well, it's a screenshot rather than the actual post. I'd have to spend a little bit more time on this, but this is going back to March 2nd, 2023. So it's a ways out. I think Palantir at that point is like $11, $12 or so. Somebody was talking about which would go first to 5x. Was it 5x? 4x. I think it was a 4x. So the valuation, I was like, I think that was shortly before I was about to buy SoFi, because I'm like, hey, SoFi is a great company too. Love to have it. But this was a discussion, obviously, you can see Amit and then yourself. And so I mentioned at the time that if the AI hype cycle continues, $40 in 2 years is possible. And we're not there yet, but man, it's looking pretty likely. And I don't see a similar catalyst for SoFi unless loan repayments hit. I learned more about SoFi, but yeah, I still stand by that. SoFi is going to move very violently when it's ready for that measured move. We see that at earnings time, and that's just a little foretaste. I don't see like a similar cycle hitting. Fintech will get some love as rates are cut, but it's not going to be like that. So, yeah.
So does this mean that you made a great trade, and then if it gets to $40 that you sell? Because I think Throwable has a good comment in here that you make AI hype cycle sound a little overvalued or bubblish, which is still great if you're the investor during that time. But at some point, does the valuation appreciation catch up to the company, or is it vice versa?
So if there's a couple of different types of bubbles, there are the very speculative bubble that has absolutely no substance. That's not the AI cycle, but there's always going to be some speculation and some exuberance. .com was maybe the best example of a bubble that was legitimate, but just ahead of itself. And there's not full similarities because it took a while to monetize and really understand what the internet would be like. And some of those that were big winners, they got punished when that bubble popped. So initially there's exuberance for any bubble, whether it's legitimate or not. And then there's going to be some fatigue. And so over the next, and Tevis and I talked about this on the...
Stop bringing up your fake show and just talking.
The far
So
anytime I talk about anything other than SoFi, you go, well, in the Bootleg Weekly.
You should cancel your silly fintech thing and join us on that day, a Bootleg Weekly, whatever day we do it on. Doesn't matter. You're beholden to us.
I actually think I am canceling my show in the next week or two. But
Google, you seriously are?
Not stopping YouTube, just going to go more broad market and break out of the fintech thing and try to
some bootleg.
Strange how
I'm
that
doing
happens.
a bootleg daily.
Strange how that happens. We start Bootleg Weekly and we kick you out of the market.
But so the first stage is exuberance. The second stage is fatigue. We are near the fatigue point in the AA trade. The first wave of fatigue. What that looks like is headlines that don't read word for word like this, but basically AI is fake, or it's like, is the AI wave over? Or there's going to be a lot of that. We're seeing that in some of the hyperscalers. NVIDIA, I think we'll see that as those year-over-year comps become harder. And that will, I think, impact Palantir's share value. Now, as far as myself, I think this AI bubble, and I'm like 99% sure of it, or not bubble, AI wave is legitimate. It's not just a bubble. It will be bubble-licious at certain points. And this is one of those where the valuation is stretched. The only thing I'm doing with Palantir is continuing to sell covered calls. And I have some leaps, just two. It's like a small amount. But these I bought, I think, for $1 and some change. So they're 2026 $10 strikes for Palantir. I'm not going to exercise those. It's just two, but once, if we're trading at $40 and more at the end of the year, I'll just take the money and roll into something else.
Guys, I'm not ending the SoFi Weekly, by the way. I'm already seeing comments of I'm not the SoFi Weekly sticking around. I'm just talking about the FinTech Frenzy, my daily live show. It might actually end up ending if I want to talk about other more broad market stuff. That's all.
So as far as overvaluation and extreme speculation, that tends to be, if we don't have much of a fatigue wave, that's going to be the next stage. I'm not invested in Palantir for that. I don't recommend doing that because that's not a guarantee. I could easily see Palantir underperforming for a couple of years once we hit that fatigue wave. I don't think it'll last that long just because Palantir and what they're doing is very differentiated. And they have like a whole other vector with this new, not whole platform, but another product that they're coming out that's going to eat into a massive $43 billion industry year over year. So anyway, I'm just going to hold what I have. I'm not going to add to it. Somebody asked me, is like, hey, are you buying? I was like, no. It's 55% of my individual investment portfolio. So I'm good. Like if I didn't have a position, I'd just start dollar cost averaging. That's it. I see where they're going. And I'm patient. Like I don't need the money from Palantir. I don't need it to go to like $350 to $500 in the next couple of weeks. Like, could that happen in 10 years? Yeah, I think so. And SoFi, it'll have, I think the initial move when the narrative changes for SoFi, we're going to see some excitement and exuberance, some very, very good weeks. I don't see it being quite the same increase as Palantir has done. But I think patient shareholders like us will see quite a bit of appreciation over time. I don't think that SoFi's valuation will ever get frothy, at least not in the near term. I can see that with Palantir though. Like I wouldn't say frothy yet, but it's not too many weeks away from that. So
now, I want to pivot really quickly because I think someone here deserves a round of applause because they're not the only one making incredible stock picks. Let me go ahead and share my screen really quick. Tevis, buddy. Honestly, Unity is kind of having a good week. All right. Up 25% this week alone. They canceled their
Dude,
what do you call it? Their meter charging, and they're going back to subscription fee exclusively.
Yeah. There's actually SoFi news this week. I'm not sure why we're talking about other.
Yeah, we'll get to it. Let's talk about the real important stuff. We're at the SoFi Weekly. We want to know, should I double down on my Unity position? You forced me to buy $100 worth of this stock. I'm thinking maybe I go in $200. What do you think?
I mean, if it's $200, then yes. I think if, like, I'm personally not adding right now to Unity. There's a lot of unknowns. There's still so much rebuilding to do for that company. It's still such a shit show. The entire old guard is gone. Like, the CEO is gone. They finally got rid of the CFO as well, and like all the key decision makers, basically. You know, they have an idea, a vision going forward. They're reversing some of the old policies. It's sort of like politics, you know, like the new party comes in and the first thing they do is they like reverse all the policies that the previous party made. So I think we're in that phase right now. Business is still not profitable. They're still like flat to down from a revenue perspective. And there's no real clear path to how they're going to get there. And that's just riddled with uncertainty as well. Sucks as a turnaround play. I mean, there's risks associated with it. It's still a duopoly, so I think it has like macro tailwinds, but I think it's still like early. I want to see more quarters, obviously. I think right now, like for me, HIMS is like my new thing that I've been just reading up a lot on. Celsius, I think, does have a turnaround. What?
HIMS is your new thing, not the stock. It's just, you know, doing all your prescriptions that way. So
I can't. Well, I don't know if they even do Canada, dude. Nobody does Canada. Like, nobody has products in Canada. But yeah, like there's a whole. It's really interesting, right? Because like every stock that you follow, there's like a content creator layer, and so I'm just finding out who the main content creators are for HIMS. I was actually thinking of doing like a HIMS weekly show, which
I support it. Super cool.
So can I let me make a response to that? HIMS is the new Celsius. Like, they may be saying that because Tevis invested in Celsius, but he wisely sold.
I'm still buying Celsius.
Yeah, but you sold like at the basically near the top. You've been buying it on the way down.
I sold leaps $8 for Celsius, and like all my shares basically are profits from those leaps.
Yeah. So Celsius is, at least in my mind, like that's a much more heavily commoditized market, and I'm seeing some pricing war and competition there versus HIMS. There's competition there, but there's such pricing power with what they're able to do versus the old traditional way of doing things that's one of the reasons why we see explosive growth. They're well run. I think they're differentiated. I would much rather invest in HIMS right now, even despite the rise to 16 something than Celsius, like much more. And I've been interested in both. I've never pulled the trigger yet. I have my price targets. I've done enough due diligence on Celsius. I'm comfortable. If they did get to where I wanted it, I'd buy it. HIMS, I need to do a little bit more digging. And this guy has a couple of videos on HIMS out. So be sure to check it out.
I don't know. Like, the risk with these growth stocks is that the growth falls and then you just get swept under these stocks that you buy at a certain valuation for the growth and the growth is gone.
You just explain growth stock investing. Go ahead.
But that's not really the case here because you're not even buying at a frothy valuation. It's a $3 billion market cap company that's doing $1.4 billion annualized. That's profitable, that has no debt, that's growing 50% a year. Like, yeah,
I think the profitability part is the I mean, not to sound stupid, but the problem that I had with HIMS before they were profitable was the total amount of spend that they had that was just going to sales and marketing, which was what was really worrying me, that they were just another company that was essentially just being better marketers. And then if they lose their virality, then they no longer have a product. That sort of problem, right?
Yes.
Do people churn off if they stop seeing, videos? But if you break through that profitability mark, it really does show that even their very expensive style of going out and making great content, that they can continue to do that with no problems at all.
Yeah, and sales and marketing is still their biggest cost center, like their biggest expense line item. I think that's largely within their control, but it's also like the company's branding and the company's presence and their marketing and reinforcing that mission statement is one of the reasons why they're capturing so much market share. I mean, my whole bull thesis is around several things. Number one is the personalization. Number two is the subscription model. And those two things alone, paired with like the telehealth data layer that they're collecting, make it a really dynamic, interesting play. And then their recent acquisition this week, I think, like sets them up for the next level.
Are you meaning to share this?
Yes. Yeah. I wanted to share something real quick before we leave this topic. So on Unity, and this isn't like we do have like the little competition of like year-to-date stuff, but this is a trap where people can fall in like and get excited about what's happening in a week. No, I'm not doing this.
Bro, why are you showing my portfolio? That's literally because I bought like January 1st. That is my Unity position.
Robinhood's winning this race, but that's not what this is about. It's easy when things are running, and Unity has been running. I mean, like, from 1670 to 19. Same with not to the same extent HIMS, but you can like zoom out and be like, oh man, look, it was $196 a share back during COVID, and clearly like they just have to turn some things around. Could it get back here? Yes, but this was a bit of a bull market bubble there because of COVID, and they have a lot of execution to go through. There's some severe issues with the company. I don't know if it's a good investment or not. It's off my list. It has been for a while. The one really tough thing with Unity is I think if we didn't have such extreme regulatory pressure right now, they would be an excellent buyout candidate, or at least they would have as some sort of floor. Microsoft, for instance, or even Apple might have been very interested in picking up. That's not going to happen now.
Meta has previously approached them to buy them like when they were private. And I mean, Zuck is really huge on the metaverse, or at least this was the thing back in 2021 or whenever. That was the entire pivot for Meta. And so the whole idea is that Unity is a platform that in the future is going to power that entire sphere. And so if the metaverse really took off, then Unity would really be a key player there. But right now they're predominantly working with OEMs as like a software that OEMs use, mainly like auto manufacturers that want to have like digital twins. So like if I'm building, I don't know, a new Ford Mustang or something, I would model it out in the Unity software and how that's going to look and what the design's going to be like and the parts, etc. And so that's how they're pivoting outside of gaming right now, because the metaverse is largely like still so far away. And then I think the other thing that hurt them is really the AI thing, right? Like when Sora came out, Unity dropped a couple of percentage points because people immediately said, okay, well, I could see AI really displacing Unity in a large way because I don't need Unity's platform. I can just ask AI to do everything for me. And then it makes, I mean, but that's what you get, right? Because you get this initial like vision in people's minds that captivates them and that drives the narrative. And that's why you get that hype cycle like you talked about. And then it emerged around like, hey, Unity could be the thing that powers a lot of these AI things. But, I think with Unity, like if I had, let's say $1,000 cash, like I wouldn't put it into Unity just because there's a lot of question marks out there. Can they go back to 190? Sure, they can, but if they execute perfectly and if the market cooperates and if they can actually monetize and get into that profitability, like they still have the duopoly benefits, but those are a lot of freaking question marks. Like I would rather go into a company like, Sofi or HIMS or some company that's fundamentally executing that is still unrecognized by the market in large part.
I want to talk more about HIMS and especially the way that you're playing it. But if we're all out here taking hard mints, we should probably leave that for the after hours show. Probably where that's more appropriate. So Josh is right. Some people are right. This is the SoFi Weekly. We do have some news. We just took a quick 35 minutes to let people come into the show. Now we're ready to give you the 5-minute breakdown. Anthony Noto was on Fireside Chat at Goldman Sachs. Okay. He said some fun things about new products that Tevis really wants to talk about, as well as credit, expectations. Things are doing much better than potentially what Ally is seeing. Ally Financial stock dropping nearly 20% in one day on the expectation that their borrowers are doing terribly. And then some other stuff with rate cuts that we can get back into. But Tevis, what are these new products that Anthony Noto alluded to?
Yeah, so essentially, he announced 2 new products at this Goldman Sachs conference. I don't have my notes on here, but one of them was called Cash Coach. And the idea is that it looks across your data across the entire suite of products and then provides proactive recommendations of how you can best utilize your financial situation, which is cool because I think this is the vision that they have for how AI integrates into their ecosystem, for it to be this proactive assistant rather than you logging onto a window and you having all the tools at your disposal, but then you are the one who exclusively has to make decisions on how you spend your money. The problem with that, and that's the current state for every software, it's completely reactive. I can log into my dashboard, I can see the state of my finances, and I can decide whether I want to pay off my credit card or ape $1,000 into GameStop or whatever in between those two options.
I can verify that. Well, I can't verify that MatFlow has Cash Coach, but I can verify that MatFlow does get the newest and greatest SoFi products before any of us do. So, yeah.
I think at a high level, it's cool because
it's not AI powered. Would be my expectation.
It's cool because it shifts the paradigm from being completely reactive to being more proactively driven, where I can log in and I can actually, because the problem with the current state is that it's a lot of autonomy in the hands of the person who, like, it's my account, for example. You're assuming that I'm informed on all of the decisions out there and that I can make the best decision with the information that I have. And a lot of people just aren't informed, especially financially speaking. Like, most people I meet out there on the street or through my job or whatever, they have no idea what to do with their money. They have no idea what different options are available to them from a retirement or savings account. And, he was saying that, like, if you have money that's earning 0.1% in this account, hey, have you heard about this other product? And your money can earn 4.5% in this other account. And so, like, that type of stuff I think is really interesting because it not only does it for you, which is a convenience, but it also teaches people how to do it over time, which is the education aspect. And it really aligns well with their mission. So I think it's going to be a really interesting product offering for their users. I don't think it's going to be like this is going to change the game for SoFi. I think it's going to be a nice to have for a lot of their users. I don't think anybody's going to be like, oh my God, transfer all of my accounts from JP Morgan to SoFi because they have Cash Coach. But it's going to be something that it drives some hooks, and it's a way that they can leverage people's, data. They can cross-sell them into other ecosystems. So I think it's going to be beneficial. I think people are going to really enjoy it. I think the user experience is going to be good. But at the same time, like, it's not going to be a massive game changer. I think it's cool that it aligns with their vision. That was just like my super basic, 5-second take.
I was joking about the private allocation, by the way. Sorry to everyone.
Oh, I didn't think you were joking. I was like, all right, what is it really?
No. I didn't invest in Row. I was just a little joke that I wasn't investing in HIMS and but I was still getting into hard dick pills, and that was it.
Well, you are getting older, Tanner, so there is that.
Yeah, there's nothing to be ashamed of. It happens.
I'm the youngest guy here.
But as far as like Cash Coach, like it sounds really interesting. It's a little odd to launch it or mention it that way, but it should, if it is as good as it seems like it might be, empower that flywheel just to be flying even higher.
So that's the thing that I do have a bone to pick, is how they are announcing this product offering. And I mentioned this, with Roy on the Bootleg Weekly. I know, Tanner, you hate me bringing that up, but like you have Alex Chris doing an event. You have Alex Karp doing an event. You have all of the Alexes. And they have bespoke dedicated events for the purpose of announcing these products. Like Tesla's doing one in less than a month. Imagine if Elon's like, oh yeah, here's all the details about the robotaxi, and he just like said that at a random conference. You're muting the possible to amplify these products that you can have, right? And I understand he might have just said it in passing, like, oh, we have this in testing, we're going to release it later this year. But it's still the first time that people hear this type of stuff. And so I think having a more deliberate effort around how they're going to package that, it's worth a conversation, right?
We have heard Elon Musk talk like there still is no robotaxi event that has been seen yet. But yet we know all these details because he has just talked about it in passing.
Like what details?
Well, I mean, the idea that it's potentially a two-door car, that there wouldn't need to be a steering wheel that's there, that it would be full self-driving, like these types of details. That's all Anthony Noto gave. He said, it'll be able to take in all your data. It's going to spit out an answer. We don't know what it looks like. We don't know how it acts, So I don't think that this was necessarily his quote unquote event, but I also think like this is a sub product of SoFi Relay. This is not a business account. Like, I think in passing, this is exactly what I wanted, because for the majority of members, he's not saying, oh, like this is coming out right now. He's saying this is not out yet. For the people who have been asking us what we're working on, these things are right around the corner. Okay. So you'll be able to get your hands on these within by the end of the year. But I don't think that this is the official announcement. I don't think he wants to tell the members that this is coming before it actually came.
There's also, like, to your point, Tanner, and just supporting that point, there is somewhat of a substantial gap between the retail investment community, the analyst community, and then all the way on the other side, like SoFi's intended user. I don't think anybody who is like a super fan of SoFi's app is listening to the Goldman Sachs conference. I think it's just people like us.
Zero.
Exactly. Yeah. So I get it. I don't know. I wish he had either been more vague about it, or he had just like given all the full a full demo in a better way.
Yeah, I think it will be here. I just, I don't know. I'm happy he said anything than nothing. Like if business banking is close enough where we can hear it in a conference, I'd rather not wait till 10:10 to get an official. I just want a little, like, just let me know. Yeah. Anyway, the second product.
Yeah. So the subscription product, SoFi Plus, essentially a subscription product where they'll give you benefits from the ecosystem based on being a SoFi member. I can't remember.
SoFi Plus.
Yeah. I can't remember exactly what the benefits are that he listed. I mean, he was saying like, travel benefits, discounts, like those kinds of things. But
no, it's the same benefits. It's 4.5% APY, quarter point off the loans. It is SoFi Plus. It's just for people that can't do direct deposit. That's my understanding.
Oh. Okay.
That was my understanding, was that it was just for people.
Where's the whole subscription benefit? Like, because my understanding was that like this was like a Robinhood Gold-esque, that like people would be paying monthly for this. Is that your understanding as well, Roy?
Yeah, that's what I thought.
I thought it was just the direct deposit benefits, but for self-employed individuals.
I thought it started out there, but it sounded like there's a couple other things. But I don't know. I'd have to see it.
Because there are travel benefits for SoFi Plus right now. Like you get increased cash back through SoFi Travel.
Hold on, let me share this. I have a clip. Okay.
Mattflow says, yes, you are correct. It's $4.99.
Can you throw that up on the screen?
Something internally with our employees called Cash Coach. So in my app right now, I can click on Cash Coach each morning. It looks
You turn it up.
cash I have across all of my SoFi products. And if I have other products connected via Relay, it looks at the cash there as well. And actually gives me suggestions on how I could better optimize my cash. As an example, this morning, I clicked on it and it said, you have excess cash and you have $1,659 outstanding balance on your credit card. You should pay it off now. So I clicked on that button and I paid off my credit card debt this morning. If you had $10,000 sitting in a checking account getting 0.5% interest, it would explain to you that our savings accounts at 4.5% interest. You could also invest in diversified way through ETFs or through robo accounts. And so that's a product on top of products. We couldn't create that product without having everything else, Relay and checking and savings, credit card, et cetera. Another product that we'll be testing at the end of this year and roll out in 2025 is SoFi Plus, a subscription product that allows you to get high interest, high rewards, discounts on other products, dedicated certified financial planner, access to things like IPOs, alternative investments, and other things. That product will be priced at a level that is paid for by the benefits you get in well excess of that price. But it also allows us to market to members and say, if you sign up for SoFi Plus, you get exactly what there is. There's no asterisks, there's no requirements. It's all part of the subscription product in much of the same way that Amazon did with Prime. When Amazon launched Prime and getting free shipping, you never had to factor into the price you saw on the screen another price. The price you saw on the screen was the price you paid. And so we want to have a product that you use and you get more value from using it, but also telegraphically says you get whatever it says. If there's not a bunch of asterisks, because you're automatically a SoFi Plus member. This is a technology-driven.
Is he saying SoFi Plus Plus? Or am I crazy? Because all the benefits that he listed, certified financial planner or dedicated certified financial, like those are all SoFi Plus benefits.
Yeah, so I have no idea, because he also said you're not going to be paying like extra for it, but then he went on to list the Amazon Prime example, which you do have to pay extra for. Like that's a subscription.
No, I think he meant no hidden fees. Like the cost is what you pay.
And it's just one tier. It's not a multiple tier. So it sounds like we just need more details, honestly. But it sounds like to me like you include all the standard SoFi Plus benefits. I don't know. And then it sounds like that there may be some extras on top of that, but I'm not sure. So
I think plus was him misspeaking. But I've never heard of a fucking product that's the same name as a different product. He's got two different tiers. They're both called SoFi Plus. What?
And that may not be the name too, but he did make there was a missed opportunity there. So with Cash Coach, telling him he had excess cash and so then he could shift it over. It would have been great if Cash Coach is like, hey, you've got extra cash. You should really put that in SoFi Invest. And he's like, and so I did. And so I bought 500,000 shares of SoFi. Like, boom. Like just, that would have been great, but it's like missed opportunities.
Can you imagine it? It's like beginning of the year. It's like, okay, so move more of your money into NVIDIA and Palantir. And then it's like, now start to shift that into Unity and boom, it's just capitalizing on all the best plays.
Well,
one day.
I'm kidding about the Unity thing. I was going to say I'm not an investor. I sadly am an investor. I have a contractual obligation to hold it for a couple more months.
So... Yeah, like with regards to you buying the stock, like I think it could be really cool if they were to like give people stock as part of the rewards, but there's all kinds of potholes that they can run into from a regulatory perspective there. I'm not saying like, hey, Cash Coach is going to say, hey, buy some SoFi shares, because they could buy some SoFi ETFs probably.
Yeah.
But like, hey, you've unlocked $100 in rewards points. Do you want this, in your checking account, or shall we buy 10 shares of SoFi for you, or whatever it may be? I don't know.
I mean, hey, I don't know. I'm excited. I don't think Cash Coach is anything that like is going to change the world. But it did make me feel so. Nubank, sorry, Roy talked about Palantir.
Hey, no new all-time high this week. No talking about it.
Actually,
just real quick, one little story. Early on in their company history, there was a point where they noticed a large increase in credit card payments for interest come through. And what they realized is that they didn't send out an email 1 week before to pay off those balances. And so they went back, not having to. It wasn't mandatory for them to send those emails out. They were just doing that to be nice. But they went back and said, hey, we are going to credit you for that interest that you ended up paying. We're not going to charge you for that. That was our mistake because we didn't give you a warning via email. And they made lifetime customers based on that decision, which actually cost them. I think that Cash Coach really reminds me of this, of SoFi making a decision to say, hey, let's truly help our customers make the best financial decisions, which is the opposite of what is financially benefiting them. If people forgot to pay off their credit cards or forgot to pay off certain loans, that would actually drive up their interest owed on their SoFi products, and SoFi would benefit. But instead, there's going to be this constant reminder to say, hey, you have excess money over here that is making 4%, when really you could be paying down a credit card that's charging you 27%. And so that financial awareness might internally hurt SoFi, but make a customer for a lifetime. And I think that that's a great, unbelievable trade-off. And yeah.
Even taking it a step further, you have $20K in credit card debt because you're an idiot. Here, we'll give you a personal loan and just pay off that credit card debt for you. And now you have to pay, single digit percentages as opposed to 18% or whatever it may be. Like within the SoFi ecosystem, right? Like it's like they're being true to their mission by not maximizing profits, which is like fine with me because they're playing the long game about it.
Yeah. And it's not going to tell you about stock picks or anything like that. I really just think it's going to be a balance between what you have in your savings, how much you have coming in, the bills that are associated, and then the credit card debts or other debts that you have that could be paid off. And from my understanding, it's just a rules-based system looking at all the mathematics between how much you're going to earn potentially in these accounts versus what you're getting charged out from those accounts. And then they're balancing that versus how much, your obligations for bills and stuff like that is also accounting for that. Nothing too crazy, at least not yet. Anything else this week on SoFi or anything like this?
So charting. Go ahead.
Sorry, do you want to talk about the Ally thing at some point during the show?
And then maybe student loan repayment delinquency stuff too. So Ally reported this week, and they lowered guidance. They mentioned a couple of issues, and primarily they said that their lower income consumer, which is a lot of who they do business with their car loans, was really getting hit, and so that segment of the business was not doing particularly well. So that caused some ripples. I think that was on Monday. That might have been Tuesday, especially in the fintech space. And so we saw a lot of big names come down at the same time as there was some regulatory concerns out of a shift. Oh, you got to remind me of the name of the rule, Tanner. But the shift in the Fed's rule as far as the requirement for banks to keep a ledger for their
Basel III Endgame.
Basel III Endgame. Thank you. It's the weirdest freaking name, but
sounds like a video game.
Or a pope, like Pope Basil III, but the end game of it. So it's like it's the Avengers version of that. No. Anyway,
Basil, whatever you want to call it.
So those hit at the exact same time, caused a lot of pressure in the markets and everything. But I mean, SoFi doesn't make auto loans, and there's a tendency for companies, and I don't know anything about Ally, but there's a tendency of companies that are not particularly well run and led, that if they're having issues and they have any ability at all to point the finger other than just at the CEO or at his team, they'll do that. And that may be the case here with Ally. I think it was certainly the case with Dollar General, unrelated. But just saying, hey, there's macro weakness in the lower end consumer. But you look at other businesses that actually target those, they're doing just fine. They say that things are maybe not like great, but they're okay. And SoFi has the opposite demographic.
Really quickly, I saw this comment that I thought was really funny. He said, used SoFi as my bank and brokerage since January 2021. Was easy to move my investments in from TD Ameritrade when I started, and moving out to Merrill lately has also been smooth too. I love that. SoFi Invest is great. It's so easy to take your investments out and move them to a different brokerage. Sorry, that one caught me off.
So, like, Ally's move downwards was such an overreaction. And considering the fact that they erased the entirety of 2024's gains off of that one move alone, is the stock a buy? Is it like tempting for either of you guys? Or probably Tanner has read into it. I don't know what Ally's financials are at all, but
Ally's financials. I like that. How's Robinhood's markets? No, I don't look into them too much. I'm not a big fan of auto loans at all. I just think, like, as a whole industry, it's kind of scummy. But so no, I didn't really even consider buying this or look into buying it. But I did follow their commentary, and it's not what Upstart is saying. It's not what Affirm is saying. It's not what SoFi is saying. They're actually sort of saying that things are actually really improving. And I just think that that's where we are right now, is that there was this huge shock that Ally was doing really poorly. And, the next day, all of these managers are coming out and saying, hey, this is not representative of us. And if they are all collectively saying that exact same experience, I think that it's Ally, the one that is the outlier. And if they are outlying so much like that, then maybe it's not a sector problem, and I'm not buying that dip.
Yeah, the same thing hit like last, I think, August. Maybe not quite that long ago. But Worldline over in Europe, I think it was actually in the spring, April. And they had mentioned that they had some massive issues on their end, and it hit every single payment provider, anyone that's even closely related to that. And most of what they do is over in Europe. And the funniest to me was that Block went down massively, and they have like no real European presence at all. So that sort of thing can happen. When it does, if there's a company that you're like, hey, I love this company, I'm interested in it as an investment, and you're looking at it for a certain level, that's your alpha. When you realize what is going on with Ally has nothing to do with SoFi at all. Completely different market, different types of loans, and there's not a risk here, like other than like just stock price action. So,
any other stories today? The student loan.
Yeah, I think one. So can't remember who brought it up, but somebody had asked about the student loan repayment. It's not that they're not being repaid right now, but just the impact in October 1st. If you do not pay, so I guess let's scoot back. So little over a year ago, the Biden administration ended up extending some of the COVID student loan delay type thing. So in essence, you're still accruing interest. You still technically have payments, but it doesn't go against your credit score if you miss payments. And I think maybe late fees were taken out of it too. So there's no commanding incentive to repay or refinance your student loans. And so the question is, with that ending in October, what do you guys think that will do as far as student loan business for SoFi? Thoughts?
Yeah, I honestly, I have a very hard time understanding the size of student loans. I think there are some comments that Anthony Noto and team have made that make it really hard for me to understand how big that they're going to be. Obviously, this has been the key driver of SoFi's business for a long period of time. So obviously, it can be very big for SoFi. But then they say things like, we're 60% of the private market, and it's very small right now. But as it picks up, can they continue to hold on to 60% of the market? What does that look like? And then I just need someone to help me break down how student loans look on a profitability perspective in terms of like the cost of funding and the defaults versus how much we actually make on a coupon rate is much tighter than what it is on personal loans. It still looks like personal loans are a much better product in my perspective, but I could be wrong. And I just haven't, because it hasn't been a large product for SoFi, I haven't looked into it very deeply, but I'm excited.
I think you mean large product since you've been investing in it, maybe. So like this, to remind folks, if you're new to SoFi, like this was their business basically.
Yeah, that's what I mean. I mean, this was their business, student loans. Like it can be big. I just don't know, because since I've been DDing it, I have not been breaking down that product. I've been really looking at personal loans.
Yeah, I think that's the real, crux of it, is the fact that this is a very different business today than it was back when student loans was big. So when student loans, and I say when, not if, when student loans will be big again, we now have a much richer ecosystem of other things to cross-sell into, of member benefits, of like the benefit of an ecosystem is how many different avenues or products you have in that ecosystem, right? Like it's sort of a network effects type of thing. The more stuff you have, the more sticky that ecosystem becomes, because the switching costs are higher. We didn't have that necessarily back in 2019 or whatever, because student loans was like 90% of how this business made money. And now we do have like an entire data layer of, okay, what are the buying, spending, saving patterns of all of these people? What are the things that we can cross-sell them into? We have all those products available. And so when student loans jumps up again, there's going to be a much higher percentage of people and a much higher number on aggregate of people that do cross-sell into other things, that do stick into that ecosystem, that do, that have a higher lifetime value. And so, yes, I'm bullish on student loans, like as an initial bull case in itself, that it's going to go up. But I'm also bullish on like the derivative of it, whereby student loans goes up, and then a percentage of those people cross-sell into other things as well, because we now have the avenues to allow them to do that, where we didn't, 4 years ago, 5 years ago.
And the unique thing about the student loans is that those are not discharged, barring some sort of legislative change in bankruptcy. So versus personal loans, you can get rid of those in certain circumstances. It's never fun or good, but that's the reality. And there's a lot less competition in this space too. So this is a headline that I saw from the New York Times, if you could throw that up. This is Navient. They're the largest, I think. Yeah, they were the largest student loan processor. Do you not see it?
Sorry, just one quick sec. Matt, I don't know if this is a possibility for you. Are you allowed to come on the show, even if you keep yourself off the camera? Because I would like to hear from you. Anyway, go ahead, Roy.
So they're out. Not only did they exit the business back in the COVID years, they got slapped with a $1.9 billion fee. Here they got hit with another $120 million student loan settlement, and are permanently barred from servicing federal student loans. And so, of course, Discover exited as well. There's some others that exited. Now, this doesn't mean that there won't be competition at some point, because these can be incredibly lucrative, especially with federal rates locked in through the summer of 2025. So even as the federal government cuts, those federal rates are going to stay the same no matter what through the summer. And so it's going to give them an opportunity here to make hay while the sun shines. And this is one of those tailwinds that's coming. But let me say one thing just to make it understood. What SoFi is doing is private student loans. These tend to be, the doctors, the lawyers, people, or on the other side, people that have failed so many times and gone on to, it's not FERPA. I'm losing my knowledge from my university. SAP, satisfactory academic progress suspension. And then you have no choice if you want to go further and you need a loan, but to get a private student loan. But as rates continue to drop, and as SoFi has a comfort to issue those loans, like they really can make a killing here, like they did in the past. It's a much more wide open field, and there's an even more compelling reason to end up refinancing over the next few years. So, and then Matt mentioned here, he said that this is a gateway drug. Like, you have to keep in mind that most of the people that are paying back the student loans are those that have graduated, that have now entered into a career, and are, for the first time since they've gotten their head out of water, they're thinking about what's next. Well, what's next? Maybe buying a car, maybe buying a house, maybe investing, having a bank account, setting up direct deposit, all of those things. And SoFi has it. So this is like the ideal way to get somebody on that flywheel. He's absolutely right.
What was I going to say? There was an interesting part that Anthony Noto brought up where he's saying there's actually a large amount of people who could refinance right now, but are simply just waiting because there's a potential that they do get some level of loan forgiveness. Once this sort of gets wrapped up, and I think probably the most efficient way that it fully gets wrapped up is just a change of administration, probably particularly to Trump's side, where there is no, like he said, specifically that he's going to abolish the idea of the student loan, not moratorium, but forgiveness. I don't know what Harris's stance on loan forgiveness is.
She may not know either, but I will say she's not. Well, she's not made an issue at all. I don't recall a single mention. Chris Hagar mentioned that she had not.
Hagar?
Well. Sorry. Yeah, but she. It's not a cornerstone of her platform at all. There's other things that she's promising, and I would be surprised just because it didn't go anywhere. I think it maybe caused some pushback towards Biden. And some people now are doubting when politicians promise the moon, especially with student loans, that they're going to get it. So I remember when Biden was first elected, before he was inaugurated, that I was working, at my university, and busy day. So I think I was on the phones that day. And anyway, somebody, maybe not, but anyway, a student contacted me and was asking, and his first question was, how large of a loan could he get? And I'm like, that's a weird question. So I was like, well, normally it'll meet your needs just based on our tuition schedule and everything like that. So, we can take a look at that. What program are you interested in? He said, whichever one you think would get me the highest loan. And his rationale was forgiveness was guaranteed, that it was just going to be free money. And our tuition was low enough that there's a lot of students, not all of them, but a lot of students that go there because it's an online university. It also has a physical location too. But for the online people, they were banking like $6,000 to $8,000 per year above and beyond their tuition and expenses that were just from the loans. And so he was like, hey, this is a great way to make extra money. And I was like, buddy, this is financial aid fraud. You're going to get, but you can only do so much. That's really hard to prove. So there's a lot of people, I think, that were banking on that. And the reality is, I think neither candidate is going to push that. Certainly not Trump. And Miss Harris, likewise, I think that's not part of her platform for a reason.
I have to say, you might be one of the funniest people to hold the straightest face whenever you're saying something that just cracks me up. But yeah, that was awesome. Are we wrapping it? Are we bringing hymns into the after hours?
Maybe a little bit of this one too.
Oh yes! How cool is that?
Yeah, let's talk about that.
The water bottle actually looks like a pile of shit. It looks horrible.
It's okay. Like it's insulated. It probably costs $30 to make, but
just put the blue all the way around. I don't.
Yeah, it's expensive, man.
Our business, like we recently came out with something. It's like it's amazing and high quality, and this is like it's all right, but I mean it's free. So yeah, I got this is a care package, I guess, from my brother Alex Chris.
The snacks look good though.
Yes, got some snacks. My daughter's already eaten like half of those. Fastlane by PayPal. They had their big event back in August. So yeah.
Can you imagine pulling up and you need to take some notes and you pull out your Fastlane by PayPal booklet?
I'm gonna use it, man. I don't know what for yet, but I for sure will. And yes, the water bottle. I just need some like Tesla gear now too. So
You have to be crazy to be a fully digital business. Like your whole thing is digital, and they hand you paper and pen as their merchandise products. I mean, that's got to be like there's got to be something wrong with that.
Dude, like with the Palantir merch that you have, and now the PayPal merch, like all you need is like some SoFi merch, some Hims merch. Like it'll be like a full fucking NASCAR driver by the end of this.
yeah, have all the patches and everything. Like Tesla's really the one I want next. I'll probably just have to buy that one, but that's fine.
Here's the thing, guys. We are all disgusting shills. I don't care what company sends me a hat. I'll wear it.
Was it?
I don't care. It's a hat with a logo. I'll wear whatever.
Was it you who was wearing a Seeking Alpha hat like way back, or was that Steve?
That was Steve. But I would 100% wear a Seeking Alpha hat. I'd wear a Robin Hood hat to a Moomoo. Like 100%. I don't care.
I mean, Robin Hood has some cool. I wouldn't mind some Robin Hood gear, but since I'm only holding Leaps, like I almost don't feel right. But I mean, I'd wear it still. I like Robin Hood and I use it. I guess I'm a user, so there we go. But yeah, like likewise, if unless I just hate the company, and there's only a few of those, not many. Yeah, send me merch.
I'd wear a Pornhub hat too. I don't care. Their logo is like a play button, isn't it?
Yeah. I wouldn't do that or Meta.
I wouldn't know.
No Meta, no block, just because of Jack Dorsey. But if it was a block hat that was like created when he wasn't the CEO briefly, that would be okay.
You wouldn't wear a block hat? I would.
No. Jack
all
Dorsey,
right.
I can't.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. It was a fun episode. This is definitely the way that I'm feeling reinvigorated, is talking about just some other things. So, yeah. It's hard to come up with content about SoFi whenever you've been talking about it every single day. Yeah. Anyway. Ladies and gentlemen, thank you all so much for watching. Bye for now. Jeez.